Welcome back. On our last episode, certified public accountants Duong and Jennifer Semien shared with us detailed information on how they inspect a T12 report to ensure that you're getting a good deal on the property. In this episode, they'll cover how to handle depreciation and amortization of the multifamily assets, the tax benefits and deductions for multifamily owners, and much more. Enjoy the show. So, what are the common challenges and risks involved in multifamily accounting, and how do you mitigate them?
Can you repeat the question again?
Yes. What are the common challenges and risks that are involved in multifamily accounting, and how can they be mitigated?
Okay. Yeah, I can help with that. So basically, the common issue that we saw in commercial real estate, and actually it's very prevalent, is that the management company don't have the record timely. Again, very crucial, and the recording of the expense are not correct. First of all, expense is being recorded without anything supporting it, so you don't have evidence that the expense has been incurred, right? Then for rental income, when you look at the lease agreement as a buyer, you think that, oh, this property have all of the lease in line, sort out, put in a folder, very organized. But the key thing is, how do you actually collect rental payments, right? So if you don't dig deep into that and you just look on the lease agreement itself, it can give you very full expectation about the performance of the property. So the issue that I have seen in a lot of properties, especially those that are not well managed, is they do not resolve issue that can improve the number. For example, they have high occupancy. They don't incur the expense that is necessary to bring in the tenant, right? So, and then the third one is that they incur expense unnecessary. For example, we have seen properties where repair and maintenance is booked at $1,000 a unit per year. That's definitely not correct, right? Because we all know repair and maintenance is about $350 a year per unit. If you go above that, that means you book capex into your capital spending into your book. And then we also saw very high general admin, a lot of things being run through. The number are not, representing the activities that are going on at the property. You may have a lot of turnover, but you look into the financial, you don't see turnover expense. So it's been recorded somewhere else. So again, if you don't have proper accounting, you really cannot make sense of the number. If you don't know the issue because the issue is being buried somewhere, then you cannot, take care of the root cause of the issue. And then I also saw apartment where there is a lot of complaint about security issue, but management did not incur anything to take care of that. So the security concern, which is an operation concern, then caused a financial concern because you don't have enough people, have bad reputation, horrible comment on review. So that caused, direct impact on your financial. So the operation criteria have to be met so that the financial criteria can be met, and vice versa. Yeah.
Okay. So how do you communicate and collaborate with other professionals involved in multifamily transactions, such as property managers, lenders, investors, and attorneys?
In terms of acquisition, in terms of purchaser, or in terms of operation management, in terms of what?
Yes, we'll just go with operations management.
Okay. Yeah. So in terms of operation management, again, communication have to be open. It have to be timely, and also I would suggest in writing, because if you don't have it in writing, a few weeks later you will not remember. I give you an example. We have an urgent call from an operation company. As a buyer, we have to address that, and the request is that the tenant have complained 6 months ago with the previous ownership, that she has mold in her apartment. Nobody took care of it, so now she actually have to use an inhaler when I hear things like that, it will typically freak me out because that can be a very big concern, right? So again, I follow up with the question, when did she first complain to the previous ownership? There was no record. So we cannot tell if she actually said that or not. Then the next one is, when did she complain about an issue with us, the new buyer, right? So if we don't have anything and we hear a very big complaint like that, that can cause an issue, right? So again, the communication have to be on time, have to be in writing as much as you can, and it have to be escalated, right? If you don't have open communication with operation company, they don't tell you anything, and you may be facing a legal issue later on, or a serious operation issue. Yeah. So open and timely.
Yep, and I could add on to what Maya said. So typically your property managers are going to be the ones that are handling, your bookkeeping. They typically offer that service, unless you're managing your property yourself, of course. But if you're using a firm to manage, they will prepare the financial data. So you can, as an owner operator, you can expect to receive that, or as a landlord rather, you can expect to receive that information sometime around like the 15th to the 20th of the month. And then so, you as the owner and landlord and operator would, want to review that information to ensure that you understand, where things are from, a rent collection perspective, which of your tenants have leases expiring, what is the property manager doing to handle that, and then also, even just looking at the financials, like is there like excess cash, or, is there, are they on budget? All of that information is very important. And, in most cases, ideal cases, it's typically summarized for you. But then you would get involved with your attorneys if you have some clients that you could tenants that you potentially need to evict. So, timely review and identification of any tenants that are significantly behind on rent, and then proactively communicating with your attorney as to next steps, so that the eviction process can begin if necessary. And then from your lenders, I think it typically tends to be pretty quiet as long as you're able to make your debt service payments. You don't typically hear from them. And then, your investors, of course, depending on when your distribution schedule is, quarterly or yearly, it's always good to keep them up to date, and have regular meetings. But yeah, I think, they're just, after the deal closes, they just kind of want to see their distribution check.
Right. So how do you handle the depreciation and amortization of multifamily assets and liabilities?
Okay, so I think this one's for me. So typically, the assets, the property improvements, those are depreciated over their useful life. So typically those items will be placed onto a depreciation schedule, and we'll come up with like a yearly or monthly amortization. And then that amount will get booked to the financial statements. Now, I have seen certain situations where the property manager may or may not record the depreciation correctly, or even calculate it correctly, but I'm pretty sure that just has to do with communication between the property manager and the tax consultant or accountant, helping them to determine what should be the correct depreciation to be taken. And then of course, there is a variation between the useful life of the property, and because everything from a commercial real estate perspective, it's typically 39 years, but if you go out and get a cost segregation study, then that that useful life can of course change. And then you add in accelerated depreciation, and of course it can change from there too. So typically the depreciation schedule will come from your accountant, and then it could be communicated to the property manager so they could be booking the correct amount every month.
And then to second that, from Jennifer, in the United States, we have something called US GAAP, the generally acceptable accounting principle, right? So you have guidance. For example, computer, you depreciate over how many years? A software over how many years? Carpet, how many years? A van, for example. So there are guidance like that. So the accountant will know, and nowadays all of that is actually built into the software. So if you enter something like a car, then it automatically set up the useful life and do the amortization in the system for you. So yeah, so the key thing is that's just a bunch of accounting rules, and you just need to follow it to make sure it's right. In terms of amortization, depreciation, you have several methods, right? Double declining balance, year of assumption, those are just accounting jargon. But the easiest and the most commonly used is straight line. So if you have something you amortize 7 years, every year is 1/7 of it, instead of all of the complex accounting. Yeah.
Okay. So how do you optimize the tax benefits and deductions for multifamily owners and investors?
Well, okay, I can take care of that one. First of all, we stay within the legal allowance, right? The whatever the law allow us to do. So first of all, we make sure that we report income and expense correctly. With that, you arrive at the NOI, net operating income, and then after you subtract for debt and amortization, depreciation, you come down to the net income, and then you pay tax on that net income, right? As an owner of a property. So there is no evasion of tax, that's for sure. You, however, can employ certain method, certain report that is allowed by the law to give the best benefit to your investor. For example, if you invest in a property, multifamily, you have something called cost segregation. You employ an accounting or engineering firm to produce for you the cost segregation, and by the name of it, it segregate the cost for you. So instead of amortize the whole building by 39 years, you come in and you pull out the layers. How many years for the carpet? How many years for the cabinet? How many years for the flooring, for example? So with that, you peel out that layers, and it allow for accelerated depreciation. So you basically, the common name of that is you capture more expense in the beginning than in the long run. So that is a tax benefit to people. And if you typically buy a new property, your cost segregation will be a whole lot less than an older properties. So again, there is always exception to the rule, but typically that is one of the biggest benefit from investing in multifamily. Yeah.
Not my next question. I'm gonna ask it fully because with the bonus depreciation cost segregation, you kind of answered some of the question that I had. But so how do you advise clients on the best strategies for, I'm gonna say, selling and exchanging multifamily properties?
That is something that Jennifer can help. So I can speak first about one that I'm familiar with, which is the 1031 exchange, right? That is also one of the vehicle to save on tax. So let's say if you buy a property, after 5 years you sell it. The difference between your basis versus the sale price, that is called the upside, and you have to pay capital gain on that, right? However, there is a rule that allow you to, if you identify a property, right, and there's guideline for that in terms of the duration of the time, 6 months to identify the property and 45 days and all of that stuff. So if you have identified some property like that, you can basically, whatever capital gain you earn in the sale of that property, if you plan it, if you time it correctly, you can park that money into the next property, and you don't have to pay tax on it until it's sell again. And then you can continue that 1031 exchange for as many times as possible. And that's why for as an acquirer, right, if you have an investor who is pressed on time to do 1031, that will be the best type of investor to have in your deal because they are ready, they motivated, they will put in a chunk of cash in your investment instead of, getting the investor from people who only have 50,000, 100,000 to put in. When you have an investor with 1031, it can be millions, and it can happen just like that. So yeah, so that is one of the strategy to save on tax. Yeah, there are other. Maybe Jennifer, you can help articulate on that a little bit more.
Well, I would say that, from just a client perspective, it would really just boil down to cash flow and valuation. Does it still make sense to keep that property in your portfolio? And, where is the market that particular property is located? Where is it headed? But yes, I think whenever a client does get ready to sell or exchange, it's definitely, behooves them to employ that 1031 strategy.
Awesome. Well, ladies, I want to say thank you for all of the great gems that you guys have provided tonight. Daniel, did any questions come in from the audience?
Yeah, I actually had a few direct ones. The first one, and ladies, thank you again. We really appreciate having y'all here today. The requirements in becoming a CPA, outside, I guess, the typical degree, is there any ongoing certifications one must have, to continue to be a CPA, or just even initially getting started?
Yes, I can help with that. So on the screen, let me share with everybody the screen so that you see the requirement of a CPA. So CPA stands for Certified Public Accountant, right? So in the past, you only have this designation if you are practicing public accounting, which I did for about 6 years when you are auditor of company. So the degree, the knowledge that go into obtaining a CPA license vary from country to country. In Germany, that's harder to get than a law degree because it takes 7 years. In France, that requires a national thesis and 4 or 5 years of education. In United States, starting from the year 2000, for the whole United States and 90s, that is where the whole country went into the 5-year system. You have to have a 5 years degree to just sit for the CPA exam. And when you pass the CPA exam, you need to have about 2 years that you have to work under the supervision of a CPA so that he or she can write you an affidavit, certify for your character, your ethics, and everything so that you can go get your license. When you get your license, every year you need to do licensure right here, right? This is AICPA. Yeah, licensure is basically you pay the license, you need to do ethic exam every year. You also need to keep 40 hours of CPE, continuing education, so that you can keep that license. So the CPE is something very standard for professional, medical doctors, lawyers, CPA, they all need to do that, right? And in our different field, we all have that requirement. The difference between the CPA and other licenses is that we have a responsibility to the public. If we are CPA, especially working for audit firm, we have the responsibility to make sure that the financial are free of material errors, material misstatement, right? Not all errors, but material financials. And because of that, we act in the interest of the public. And if you see the conduct and the ethics requirement for a CPA, it's pretty tough. It's similar to people working in the legal field or people working in the judgeship. You have to keep confidentiality of data. You have to act in a very, impartial manner. You have to maintain your independence. You cannot sign off on something that being fraudulent. You cannot, obviously you can refer a service, but if you earn a commission on the service, you have to disclose it. So there's a lot of requirement that make sure that a CPA have the conduct to, because we are in a role that, hold ourselves out to the public for the benefit of the public. So 5 years degree, 5-year college degree, pass a national exam. In my time, it was 4 subjects: law, audit, accounting, and taxation. Now it's 5 subjects. You also have to pass an exam on economics. So, and also you are being graded on curve So every year there's only about 10% of the people who sit for the CPA exam that pass the CPA exam. Yeah. So, and then with the CPA exam, that's just the beginning for you to go into different fields. So for example, I'm a CPA, but I work for corporation. I don't know much about filing tax return, right? A CPA that work for a bank, they may do underwriting for bank. They may not know nothing about tax at all. So it's very specialized area. Yeah.
But you worked for it, so you may as well keep it.
Yeah, I see. Well, thank you, ladies, for being masterminds of what y'all had to go through to have the CPA, at the end of your name. So thank you. The other question I got here: what are the top software tools to automate multifamily accounting processes, and more so, I guess, what would be the best software program so that way folks can, give you the information needed, so that y'all can do your jobs effectively.
Yeah, actually, Jennifer has compiled a list of some software here, and we want to share with you on here on the screen. First of all, the most popular software that I have seen in reality is Yardi, that almost every multifamily use. There are other like RealPage, LeaseHawk, Entrata, all of these different software with different functionality. You typically can go search for the best one recommended by the industry. Dressman, I have seen it. MRI Living, I have seen it. Yardi Voyager, Yardi right here is the most popular. Harvard University, the commercial real estate of Harvard is mentioned by Yardi. Yeah, so there's a lot of software that you can use. We'll be happy to drop the link here for you so that you can save some time on researching it. Typically, when you buy a property, the company, the property already use the software, so you can either choose to continue that or you find something better. Always look out for the newer software because the cost become cheaper and cheaper if you use a more, a newer version, a cloud-based version. You don't have to buy the desktop version, for example. Yeah.
I was very surprised to learn that, the software can range from anywhere from free to thousands of dollars a month. So.
Yep. Most of the financial I have looked at, Yardi is $3,500 to $1,400 a month. Yeah.
Effective. Well, as long as it's doing the job, it's all gonna make it out. And then for both of you ladies, because I know accounting can be fun at times, but for both of y'all, what keeps you motivated? With the day in and day out of just punching numbers and dealing with folks and coming across those fun fraudulent items, what just keeps you motivated on a day to day?
I'll let Jennifer talk first, and I will share mine. Yeah.
Okay, so I don't know. I say this all the time. I'm not in love with accounting. But like I said, I am good at it. It has been a great career, for me. I do find it interesting, just to have access to, to data, this inside data for different companies, and being able to look at and, analyze, their situations and scenarios. And then, the role that I play today as a consultant, basically just advising them. And so being able, seeing how a lot of people just aren't really like into the numbers, and they could probably care less, couldn't care less, about the numbers. But whenever you put data in front of them that is, accurate and reliable and helps them, arrive at a smart decision, to me, that is really the driver, because a lot of people make decisions on, half-baked information, and it's very risky. And then I feel like if you can have great data, make smart decisions, you have an even better chance of success.
Thank you, Jennifer. For me, accounting, like as I explained earlier, it's a vast area, right? In my area, for 10 years, I did technical accounting, high level, SEC financial reporting for corporate. I work with lawyers more than crunching the number. I have staff to do the number for me, so I never have to key in anything. My skill set is more of analyze the data and make the data talk. And so similar to what Jennifer said there, you do not have the right action if you don't have the right data. And if you don't analyze it, you don't collect it and record it correctly, then you may make a very wrong decision based on what you thought being the data, right? So that is the joy of, having the right number to work with. And accounting skill set at high level is very expensive and very sought after. I was behind the consolidation, merger and acquisition of T-Mobile and Sprint in one day. The two companies, the light changed, right? From yellow to magenta. In order to achieve that feat, that's a work of 500 accountants across the company. And it's a major skill set, from the knowledge, from the accounting, from going through the process and the implementation of that, right? So accounting is truly a very, useful field, and it serves various industry. So yeah.
And I will say, Maya, it has been, I guess a very useful skill set, especially when it comes to the underwriting and due diligence piece that we play in our team.
Yeah.
Thank you both, ladies. Thank you. And last question that came in here, Jennifer, what has been your biggest lesson as a CPA, and how has it made you better?
I can go first with that. My biggest lesson as a CPA, I learned it throughout the years of being an auditor in PricewaterhouseCoopers, that taught you to held to a higher standard. You work very diligently. Sometimes you work through the night to make sure that things are right. Nobody are there to check up on you, but you have a sense of duty and responsibility. And if you carry that throughout your career, you will build with you a reputation for integrity, and that will help you later on in your field, any field that you go to. Now, as an investor and as a general partner, I have limited partner. Passive investor come to me precisely because of one word: they trust me. They say, I trust you. And so that is something that you build over time. Don't go easy on that. Don't sacrifice that for other factors, because that is what makes you who you are. Yeah.
Thank you. Jennifer?
My biggest lesson, and how has it made me better? I would probably say just in addition to what Maya said, as far as like work ethic, and just being driven and with a sense of responsibility, customer service and basically deadline focused. So I work with a sense of urgency, even if it's just me setting my own expectations, and being an entrepreneur or business owner, that is definitely a skill set. I think we all know that you kind of work around the clock almost, and so it's really necessary to have that drive, to get things done, especially when it's just you holding yourself accountable.
Wonderful. Thank you, ladies. Back to you, Will.
That was awesome information that Maya and Jennifer gave us. To put yourself in position to grow your knowledge about multifamily investing, subscribe to this channel and reach out to us so we can have a conversation and find out how we can assist you. Make sure that you click that alert bell when you subscribe, and I'll see you on the next episode.